Well, join us in the studio to take a look at the markets closed today, and of course, the banking results which we've seen recently is Jude Fejokwu from Thaddeus Investment Advisors. Thanks a lot, Jude, for coming on to the show. First of all, let's maybe talk a bit about what we just heard from Sanusi. He has said that Amcon should be in play by next Tuesday. Do you think this justifies the strong movement we've seen in the rescue bank recently?
It's a feeling. It's human psychology. People believe that these banks will turn around once Amcon comes into business. So once you say it's coming up next week, people rally in those banks, thinking that after Amcon is born, those banks are safe and sound. So it's just more of a human reaction. That's why you have the prices going up today.
And then looking at the banking results which we've seen recently, what are your general thoughts on what we've seen so far? We've seen the common theme of top line revenues down, and then of course bottom line profits up. What are your general themes? What are the big concerns for you, and what are the positives that you're seeing?
Basically, all the banks, to different degrees, still have a large number of loans that are suspended interest. They're not earning anything on it. And then they're lending very cautiously, AAA credits, which are all growing single-digit percentage growth in loans. Now, with that, you find out that your earnings are not coming in enough to cover the loans you've given out there. So that's why you have declining earnings, and they're not willing to really lend aggressively going forward. So what they're doing right now cannot cover what they've lost in the past in terms of non-performing loans. That's why you have declining earnings. Now, on the net income part, it's simple. You have some recoveries coming in, and given what you were last year, definitely have a very decent spike in net income. So nothing really special is going on right now.
I think another theme which I've noted is the cost side. We've seen cost-income ratios drop significantly. To what extent is that a result of increase in cost, or is it more a drop in revenues that is driving that higher?
I think it's management. Management has seen some areas where they've been quite profit-getting in the past, decided to cut things down. Some banks no longer put you in hotels. They have guest houses, arrangements with them, things like that. It goes that deep. So they're really cutting down on costs in various areas, and that's why you're seeing, and some layoffs also are still going on quietly. Right. I won't call names. So all those things together are helping them to cut down their costs, and definitely in other areas too.
Okay, we've quickly run out of time today, but we'd like to take that further on another day. But thank you so much for coming on to the show.